Azlin Ahmad, the editor of Crude Oil Markets, joins in with a quick review of that decision. Azlin, great to have you on the show. Now, this is, lower oil prices mean good news for India, and I think this output cut has just said that, has just indicated that prices at best would be range bound. Maybe the immediate downside risk has been protected.
Yes, I agree. I mean, I think that although the market was sort of hoping that the cuts would be bigger, like more in the line of 1.5 or more, but I think that 1.2 million barrels per day that they agreed on is still quite a positive number in terms of taking out the oversupply in the market. So, and it's a little bit higher than the indications that the Saudi oil minister initially said about 1 million barrels per day. So I think that in terms of the crude oil prices, this will definitely prevent further falls. I think that the market will still take some time to sort of evaluate the impact, but I expect that the market prices should stabilize, and I think that we will see prices start going up closer towards the mid-60s or even higher in the next few weeks as this new sort of filters into the market.
Okay. Hi, Azlin. This is Mubina as well joining in. What is the immediate impact you see of this cut of 1.2 million barrels? And of course, not to mention, Iran is exempted, Libya is exempted. And while they do form only a smaller part of what they contribute to the overall oil markets, what do you make of 1.2 million barrels? How do you think it will change the demand-supply situation as well? Because I think the last data indicated that we are in that situation of glut.
Yes, I think that it is an oversupply, and I think that if I'm not wrong, the last IEA figures sort of indicated that the oversupply was roughly in the range of about 1.5 million barrels per day if OPEC maintained its production and there was no cut. So this will take out supplies. Yes. I think that Iran getting the exemption is a little bit of unexpected because it wasn't in the initial discussions. But as with the U.S. sanctions on Iran, whatever it is, even though the U.S. has given some waivers, definitely Iran production would have fallen at least some volumes. Right now, the market is trying to figure out how much Iranian crude exports, crude production has fallen, with some countries getting the waivers, some are starting to think about re-importing. But I think that what is quite important also is the fact that Russia has said that it will cut, I think, about 230,000 barrels per day, which is more than the initial indications that it gave that it would, it was considering not cutting or cutting only a small amount of 150,000 barrels per day. So the fact that Russia has agreed to cut more than its initial indications, I think is positive. Saudi Arabia, it's always been known that Saudi Arabia will shoulder the bulk of the cuts, and Saudi Arabia has said that it will cut volumes. So I think that there's a bit of within OPEC, I guess it took a lot of negotiations to come to this agreement. But just pure fundamentals, the fact that they are ready to take 1.2 billion barrels per day off the market, that will be positive in terms of the market balance.
Very quickly, two questions, rolled into one, and just want a very specific answer here. So, what is the road like ahead for oil prices into 2019? Can we talk 70 again, or as some analysts were indicating, even if with this output cut, you're likely going to see a range of between 60 and 65. That's one. Secondly, does the discount with WTI crude increase then, because the U.S. is not participating in this cut and they are putting in more oil into the market?
Well, I think that the first question is that I think that we'll move closer towards the 70. I don't think we've got, at the moment, we don't have a clear forecast of what's going to happen in 2019 because I think the demand figures are still a bit hazy. But I think that closer to the high 60s, around the 70 would probably where we see ICE Brent in the next, at least the next month or so. In terms of a WTI crude, if you're looking at WTI Cushing crude, I think that there could still be some pressure, and there could still be a big spread between WTI and Brent because, as you say, U.S. is producing, but it's also because the infrastructure in the U.S. at the moment prevents. There's not enough pipeline capacity to export the production the U.S. is producing. So, and that will continue until at least the third quarter of 2019. So I think that at least in the first half of 2019, there should still be quite a wide discount of WTI under Brent.
Azlin, thanks very much for joining us with that quick review of the OPEC meet. Range bound for crude, but like you pointed out, net still positive for India.